Good morning. This is an open meeting of the United States Securities Exchange Commission on January 25th, 2011. Today, the Commission will take up three matters. First, we'll consider a proposal requiring investment advisors to private funds to provide information to assist the Financial Stability Oversight Council in assessing the systemic risk that these funds may pose. Second, we will consider a proposal to conform the existing definition of accredited investor to recent legislative changes. And third, we'll consider adopting new rules concerning shareholder votes on executive compensation and golden parachute arrangements. All three of these items stem from the Dodd-Frank Wall Street Reform and Consumer Protection Act. We begin by considering whether to propose for comment rules that would require registered investment advisors to private funds to provide the SEC with information to be shared with the Financial Stability Oversight Council. The Council would use that information in assessing the systemic risk profile of those advisors and the funds they manage. The Commission would propose this rule jointly with the CFTC, which will be considering it at an open meeting tomorrow. Today's proposal stems from the lessons learned during the recent financial crisis, lessons about the importance of monitoring and reducing the possibility that a sudden shock or failure will cascade through the entire financial system. The Dodd-Frank Act sought to address this issue in part by creating the Financial Stability Oversight Council to carry out this role and by requiring the SEC to collect information from private fund advisors to inform the Council in its assessment of systemic risk. For hedge funds, private equity funds, and liquidity funds, the information required would be tiered so that we would receive more information, more detailed information from larger private fund advisors rather than imposing the same level of reporting and reporting requirements on all private funds. While the group of large private fund advisors is relatively small in number, it represents a large majority of private funds' assets under management. For instance, the rule would require heightened reporting from hedge fund advisors managing at least $1 billion in hedge fund assets. And although this heightened reporting threshold would apply to only about 200 U.S.-based hedge fund advisors, these advisors manage more than 80% of the assets under management. Similarly, SEC staff estimates that there are approximately 250 U.S.-based private equity fund advisors managing over $1 billion in private equity fund assets, representing approximately 85% of the U.S. private equity fund industry. In addition, under the proposed rule, we would require less information from advisors managing large private equity funds than the large hedge funds and liquidity fund advisors. And this is because after a review of the available literature and consultation with staff representing FSOC members, it appears that the activities of private equity funds likely present less potential risk to the U.S. financial stability than hedge funds. However, information about those activities could be important to the assessment of systemic risk in the broader financial system. Today's proposal would also create a new form, Form PF, for collecting the information intended to give regulators new insight into private fund activities that have the potential to create systemic risk. Proposed Form PF is the result of extensive consultation with staff of the other FSOC members, and it grew out of the close collaboration between the SEC, FSOC members, and international regulators, including those from the United Kingdom and Hong Kong, as well as with IOSCO. Such coordination is important because collectively, hedge fund advisors based in the U.S., the UK, and Hong Kong are estimated to represent over 92% of global hedge fund assets. As a result, consistency among these jurisdictions will facilitate the sharing of consistent and comparable information for systemic risk assessment purposes and minimize the burdens on the hedge fund industry. Much of the information to be collected on Form PF tracks questions contained in the surveys of large hedge fund advisors currently conducted by the UK's Financial Services Authority and by other IOSCO members. While this proposal builds on past thinking and international regulatory efforts, it does lay out a new form of information collection at the SEC, and as such, public comment will be particularly important in refining any final private fund systemic risk reporting requirements. As such, the public comment period will remain open for 60 days to give industry participants, economists, academics, investors, and others time to assess the proposal and consider the numerous questions on which we solicit input. Before hearing more details from the staff about this proposal, I would like to thank those who worked hard to put the proposal together. This rulemaking had a truly cross-divisional core team. From the Division of Investment Management, Bob Plays, David Vaughn, and Sarah Tansitoff and David Bartell. From the Division of Trading and Markets, Chris Arnold, and from the Division of Risk, Strategy, and Financial Innovation, Harvey Westbrook. The group was also assisted by Jennifer McHugh, Tram Nguyen, Danielle Marcassani, Dan Call, Keith Canyon, Rick Sennett, and Jamie Eichen in the Division of Investment Management. David Becker, Meredith Mitchell, David Blass, Lori Price, and Jill Felker in the Office of the General Counsel. Bruce Krause in the Division of Strategy, Risk, Strategy, and Financial Innovation. Gene Golke and Jim Reese in the Office of Compliance, Inspections, and Examinations. Robert Kaplan, Bruce Carpati, Brian Fitzpatrick, and Igor Rosenbilt in the Division of Enforcement. Greg Berman in the Division of Trading and Markets, and Troy Beatty and Shauna Steele in the Office of International Affairs. I also want to thank my colleagues on the Commission and all of our councils for their contributions. And now I'll turn this over to the staff to hear more about the recommendation.